finance or insure a house, or stuck with a house and don't know what to do? Florida Talk Real Estate has been your local one-stop real estate shop since 2012. Get the advice you need from your local real estate pros. Here are your hosts, Paola and Johnny C. live on Real Radio.
Good Saturday morning. Welcome to another edition. It's Florida Talk Real Estate. We got you for the next 2 hours of infotainment. At least I hope. Thanks for being out there. I see you 92.1, 101.7, the old terrestrial radio. Great to have you along for the ride. Of course, if you have your free download, your iHeartRadio app, we are worldwide. That's right. You could be just about anywhere tuning in. That's pretty fantastic. And we live stream on a Saturday as well. Find us on Facebook, on YouTube. That's Florida Talk Real Estate on Facebook. Florida Talk Real Estate LLC on YouTube. That's home of a ton of informational chunk videos. Plus our live stream every Saturday. Thanks for being with us. If you're right out the gates. If you're not, you can join in at any time. And of course, joining in is toll free as well. If you'd like to join the program, questions, comments, concerns in the world of real estate, you want to dive into the conversation currently at hand, go ahead and do it. 877
every Saturday. Thanks for being with us. If you're right out the gates. If you're not, you can join in at any time. And of course, joining in is toll free as well. If you'd like to join the program, questions, comments, concerns in the world of real estate, you want to dive into the conversation currently at hand, go ahead and do it. 877-927-6969. That's toll free. First voice you'll hear, the melodious tones of our producer extraordinaire. He's working hard right now, by the way. There's Jimothy, my brother from another mother.
Hello, and good morning, gentlemen. Happy Saturday. Glad to be here with you.
What's up, dude? Look at you out the gates. Boom, boom, boom.
Here we go.
Over there.
Yeah, let's boom, 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 Johnny.
Boom, 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 boom. Always a pleasure, my friend.
Good to see you, bud.
Oh, yes, good to see you too. Johnny, that's me, Johnny C., your old buddy, your old pal, your air traffic control. Let's get your starting lineup on a Saturday morning. We go straight to the top, y'all. Our fearless leader, 13 plus years now. I've told you he runs a top producer in Keller Williams team. And of course, you can find him. It's the Florida Home Pros team, Keller Williams Innovations. There's Jimmy D, Jim Paola. How you be?
Hey, I'm doing good, Johnny. We're having some technical difficulties, but we're plowing through it. So how are you doing today?
I'm another beautiful Saturday morning, as I told Jimothy, getting ready for a little Florida Talk Real Estate. It's pretty all right. We're blessed with another chance. So let's get her done.
Yes. So I don't know. Did you just do that?
Mm-hmm. Yeah.
Awesome.
So
Thank you. That's kind of what I wanted
more
to
of the
do.
Brady Bunch way we normally are.
Yeah. I don't know how you just did that, but thank you. Okay.
Oh, we're dealing with stream stuff.
Yeah.
Gotcha.
The technical stuff.
Yeah.
Hey, it's a unique show because it's going to be me, Johnny, and Jimothy today. So any calls today would be greatly appreciated. We'd love to see if you can stump us. So call us and ask us any questions you have about real estate, what's happening in the market down here. And if you're thinking of selling and buying or you're an investor, give us a call and ask us questions. You have questions about insurance or refis or mortgages, interest rates. We do have a lot of kind of newsy stuff to talk about today, Johnny.
Cool.
I always call us that we're pretty wonky on this show, meaning, we do talk, when the new consumer price index comes out or the the PCE comes out,
right,
and the job reports, and we talk about what's going up or down in inflation. We've been doing that for years and years, but rarely has these wonky reports that we try to gauge where we are in the market at any given time been more controversial than the last 48 hours, right? Talking about the labor statistics report that just came out.
Sure.
And it really affected the interest rates yesterday. So we've been
and the market too. I mean, there's a lot of reaction to it.
Yes.
Interestingly.
And everybody's asking for an interest rate cut and they still don't get it. I had a guy, long-time listener on the show, a guy named Jay. He called me about a question about something about his house. And we started talking about what's going to happen in the future with interest rates. And he started talking about how the Fed was going to cut the rate and, whether it was going to be a quarter point or half a point or whatever. And then he started equating.
Is he thinking September?
No, this is early last week before the July meeting, right? And I told him I didn't think they were going to cut. But he was actually taking what he was reading in the news about the quarter point cut or half point cut with the Fed and then subtracting it over what the average interest rate right now is for mortgages.
Oh, wouldn't that be amazing? If that was the case, I'd be like, cut that rate.
Yeah, exactly,
Selfishly,
right?
of course.
Exactly. So he was thinking in his mind that
He's out trying to buy, you know what I'm saying?
so in his mind, he was thinking 6.75 is like pretty much the Fannie Mae average right now. So if the Fed cuts the rate a quarter point, we're going to be down to 6.5. And I'm like, it doesn't work that way.
No.
And people don't get that. They still, and I get it, if you're not doing this for a living, it's just another headline that flies through your, flies across your screen a million times a day. And, most people don't get in the weeds on it. And all they do is read the highlights, which is usually the headline.
Mm-hmm.
And usually the headlines are wrong. I hate to say that because I used to be in media, but the headlines, they're so misleading where they compare the Fed rate to the mortgage rates, and they have it like a direct correlation that one's going to follow the other.
Never mention home buying or buyers or any of that when they're talking about the Fed rate, and a lot of headlines will morph those things. And it's like, what are you doing? Why are we doing that?
And it confuses the public so bad, right? It makes it so confusing for them. So I get where Jay's coming from. I'm not making fun of Jay. I'm just saying these are normal things that people
Jay
think
could be
about.
Anybody. We could be saying Bob.
Yep. It could be or Susie or anybody, right?
Exactly.
Yeah,
Megan.
Well, Rich is pretty good. He's a nice guy.
It's true. Yeah.
So
I think it's senility more than anything.
So let's talk about that just real quickly. We're going to talk a little bit about the unemployment rate. I've been saying on this show for years and years now, because ever since the crash happened, people are predicting the next crash, right? It's right around the corner. It's right around the corner. It hasn't come. It's been 10 years. It just hasn't come, right?
Right.
And what I keep saying is the number one indicator of whether we're going to have that type of crash again would be unemployment, right? If we get unemployment, I'm making this number up. This part I'm making up in my head. But I'm thinking sixes. When we get into the sixes, that's about 2 million jobs lost
for unemployment. Yeah, because at that point we're talking about how can people pay their mortgages, right?
Exactly.
There's a big lump of people that won't be able to pay their mortgages. That's a crisis.
And that's what happened last time, right? And that's what happened last time. Now, last time it was mostly because of dirty mortgages,
right?
And a lot of the homeowners had culpability in that because they took the dirty mortgages.
And again, in that, it was very almost predictable. I know predictable is a hard way to really say it because you're like, well, then why didn't? But it was predictable.
So predictable.
Yeah, you're like, how is this? This is propped up by okay, interesting. See how long this lasts. And the answer is not very long.
And it was so funny because when that was starting to crash, I'm talking now 05, 06, like that time.
Yeah, housing market, of course, if you're not following along.
But everybody thinks it's 08, 09, right? Because that's when the bailouts started happening and the federal government really got heavily involved. But really, it was...
Well, then we started getting into too big to fail. Like, that's when we were bailing out the banks. We're talking about the housing market.
And that was more late 05, early 06, and then it just got worse and worse for years and years.
And it turns out, I mean, not to get convoluted, but I remember railing on the radio. My opinion was we can't bail everybody out like this. Turns out it kind of worked out. I mean, I guess they did the right thing. When it washes out in the end, it appears like it was the best decision. But I know in the moment I was like, oh man, why are we doing this?
It's hard to tell because Lord. I mean, what would have happened if
that's where I was
had we let the banks fail the way like capitalism is supposed to work,
right?
What would have come out of that?
How does that wash out?
And you don't know. I mean, nobody can. I mean, you can kind of speculate.
Well, the creme always rises to the top, right? It always floats up, and that would be the 1%, the money. It's just it would have been there in the end, but at what level?
Right. And
would have been an interesting experiment for sure.
I was in favor of the bailouts back then. I didn't like the way the bailouts were created because they were bailing out the banks, and I think they should have bailed out the people.
Sure.
Because the people, even though that the people a lot of them were culpable and responsible for the decisions they made, they signed these crazy mortgages when they knew they didn't really have the income to afford that house and that house and that house that they had under contract, plus the house they were living in, and they were riding it all on black, right? They're putting it all on black, right? And they're just like, hey, I'm just assuming
lenders were
that
doing the same.
yeah.
They were.
And the lenders gave them the opportunity to do it,
sure.
but nobody forced them to sign the document. So there was culpability, but out of the two ways, it would have been much better in my mind to save the people and allow them to stay in their house. It would have been real easy. That guy, Ira, what was Ira's last name? I can't remember.
Ira, it's not ringing a bell.
Rosenberg? He was one of our first mortgage brokers on the show.
Oh,
well,
then
might have been our second
when you
mortgage
said it, I'm like,
broker.
why does that sound like?
I think I think it was Rosenberg. He's a really nice guy. He's still a mortgage. He still owns a mortgage company down in Boca.
I think that sounds right.
But he used to be, before he owned his own mortgage company down here in Boca, he used to be the regional director for Countrywide for the east of the Mississippi, like the whole area. And he wrote a white paper right before he left. This is before the crash.
Yeah, saying,
and he
hey,
predicted this was going to crash.
Yeah, because Countrywide was very much implicated in a lot of that.
And what he recommended in that white paper is that they took any mortgages that were written or refied at a certain date or later, that all those, they would come, the bank's cost would come out with an appraiser, determine the current appraised value of that home, and automatically reset that mortgage to that moment's appraisal. That would have shaved off like 10% at the time or 15% of the losses people were dealing with.
Yeah, it might not have been enough, but it would have been. That's what should have happened. Like
opposed to giving it to the banks, right?
Try to make it so people they want
didn't
to pay
lose
their mortgage.
hose.
Well, they want it. That's why they signed it. They want to make a mortgage payment every month. They have been. Now just put it back to where they can afford it again, and they'll continue to do that, or don't. And we can, I guess.
What happened is the bankers and a lot of other people were arguing back in the day, and we're really turning back time here, but they were arguing back in the day that you can't just write contracts with people and then just automatically rip up the contract and set new terms. What kind of world would that be? And that's what the argument was. It'll be total chaos. Nobody will ever believe in contracts again.
Anarchy.
And I'm like, well, isn't that what you're doing with loan mods and short sales? And deed in lieu of foreclosures? You're doing the same thing.
Okay, thank you.
Yeah.
I was just going to ask you, when you went through all that process of being, because that was your specialty at the time.
That's what we did.
Was short sales. Mm-hmm. Isn't that pretty much
it's right close. It's a reorganization of the debt, right? And instead of just doing it as a blanket way, saying, hey, look, we know we effed up, meaning the banks, and that we wrote all these dirty mortgages and we knew they couldn't make the money either, so let's just go and reset all of them so that we can solidify our foundation. That probably would have been way better, but instead we spent billions and billions, and I don't want to say trillion, but maybe even a trillion.
So they still get their foundation solidified. It's just not in the way that it probably should have happened.
And how much money and time and aggravation and unknown stuff happened through all those cases. They had to go by case, hear everybody's tale of woe, and then decide if they were worthy or not of a short sale, a loan mod, a deed in lieu of foreclosure, that kind of stuff. So now what's happening is what's happening right now is that it's for the last several months, the president and his administration have been saying basically that they want the Fed to cut the interest rates. The Fed hasn't wanted to cut the interest rates. They did start cutting the interest rates last year. People keep forgetting that. And when they did, we had one of the fastest increases in interest rate, mortgage rate increases in the history of the United States.
And the way it's being framed, like, it's hard to not kind of side with that thinking too. If when it's framed with, look how much money it's costing the country in paying our debt. Right. So how much extra it costs us to pay back our debt, which is almost insurmountable at this point, right? That's a hard thing to not get behind. You have to look way deeper into what else happens if we change rates. And go, oh, okay, well, that's why we have to hold pat. That would be great if we could not have to spend way more for our debt than we need to as a country, especially if we can just instantly change that on our own. That's it's just That's that lowest hanging fruit right there. And you're like, that's not the thing. We got to step back and look at this tree a little bit more. Oh, okay. Then you can't do that. Look at the tree is not as healthy as we want it to be. That little piece of fruit looks like we should just pick it, but oh man, the tree's not ready.
And it gets even a little deeper because, you know, the US dollar is the world currency.
Yes.
The reason why it's the world currency is because we make monetary policy independent of our needs of the United States.
There's faith in how it's established.
Right. That we're doing it independently.
That's right.
So if we start messing around with the interest rates because we want to lower our debt,
right,
the rest of the world's like, that doesn't sound like a country that's in really good financial shape if they have to do that. They've never done that in the history since after World War II. They've never done it, and now they're doing it. That's a big warning sign.
Should we be relying on the dollar as much?
And then you hear about, like, what I read in the papers, Japan and Germany, they're looking at like those currencies. Japan's a big one right now.
Sure.
I laugh about Japan because remember Japan in the 80s, they were the big ogres in the 1980s.
Sure
Japan
were.
was taking over everything, right? We were all going to be eating Japanese food for the rest of our lives, right? According to people in the 80s.
Right.
And then they had like the lost decades because their whole thing collapsed. Now people are going to start thinking that Japan has a stronger economy in the United States. That, you know, I'm not saying it's true, but if people's perceptions are that way, that is a big telling thing about where we are right now. Now, I'm not saying we're in a crash right now, okay?
Nope.
I don't want to say that we're crashing, but this is all very interesting because we talk about these jobs reports every month when they come out. But this one is a big one. And this is what I've been saying since the beginning of the year.
And they do tie to more the housing market. It's a long train. We're one of the cars in that line.
Mm-hmm.
Yeah.
And right now, you know, the stock market overall has been stronger than the housing market. And just because one market's strong doesn't mean all markets are strong. So you could have a weak this market, but a strong that market.
When you say strong, you're talking about fluidity. You're talking about movement.
Well,
because there's a ton of equity in the housing market. You could view that as strength. You could. It's just not very fluid.
Well,
there's not much being turned over.
When they're talking more about sales and the
right.
You're right.
So it's
about
fluidity.
The fluidity of the market.
It really depends on how you look at
it.
It's a strong housing market. If you're like, man, look at the equity that so many folks are. You just can't tap it. Because who's going to do anything to tap it right now unless you're selling it?
I just read an article. I think I saved it for later, but we'll talk about it right now. There's 86 million homes in the country. I didn't know this. I just read this. This is an estimate. 86 million homes in the country. And out of 86 million, how many million do you think have no mortgages out of the 86 million properties, residential properties?
Gosh, 86. At least half? I'll say half.
So 50%?
Yeah.
Really? That high?
I think so. I think there's a lot of people that have just been in that same house for so long.
Well, there is a lot of that. A lot of like family heredities where it's been passed down. I maybe 20%. I don't think it's that high, but
I didn't know percentage, only know numbers, so I'm going to do the percentage right now. Hold on. I asked percentage.
So
it's probably way lower.
20 million. 15 million.
35%. 35% of the homes, 30 million out of 86 million have no mortgages whatsoever.
35.
So
right in between our two.
There's like a couple of $1 trillion of equity in there.
Just in that.
Just those people alone are trillions of dollars.
There's a ton of us holding right? We have to make our mortgage payment who still have
that's one of the reasons to say, like, you know, that we're going to have this housing crash and everything. You know, we're not seeing it in the foreclosure short sale, right? We're not really seeing it. And we've been saying that for a very long time. But what makes this jobs report so surprising?
And that's, again, we started this with you saying the real, in your mind, if we start seeing unemployment become a problem, that's when you're going to start being like, oh man, housing market, let's pay attention. This is the slippery slope.
Yeah. And what I would expect then is that people would have to sell their houses fast because if they couldn't get reemployment, right, they couldn't get a job right away. I'm assuming it's that kind of market, right? So you can't get the job right away. So then you got like 3 months before you start getting in trouble with your mortgage.
All right. So with this jobs report.
Mm-hmm. So this jobs report, it came out, they expected about 110,000 jobs. That's what I read the day before. It came out 73,000. That's kind of a weak monthly report, but it wasn't the end of the world. No big deal with that.
Yeah.
When I
and,
read
and
that,
will be readjusted, by the way,
and we
because they
knew it
always
would
are.
readjust because we talked
Always
about it
are.
all the time about the readjustment.
Well,
But what was surprising
it's what
is
they do every time.
they did readjust for the April and May. The June, by the way, was 73,000, not July. So the April and May came out, and they readjusted downward by 258,000 jobs. That's a tremendous amount. That's like a quarter point on the unemployment rate. About a million homes, about a million jobs, or 1.1 million jobs, roughly, is 1% of the unemployment rate.
But what's
right?
interesting though is we didn't see, there's like no movement on people filing for unemployment.
Yeah,
It's like,
right.
it's just not, it's almost,
But this was job creation.
I understand.
Right.
So even if the jobs created went down massively, it doesn't really imply that there's unemployment.
Well, when they say that April and May, they only had about 45,000 jobs created for both months combined total, that's really low. And that kind of ties in more
We just
to
don't have,
what
we just
you
don't
would
have
expect
businesses
with the tariffs.
We don't have businesses spending money. That's what that's telling you.
Well, I think what it is businesses were uncomfortable with what was happening with the tariffs because they didn't know. You got to remember, this was April and May. April was like when they really started talking about the tariffs, right? It was just popped out of nowhere, right? So there was a lot of unknown at that point. Employers didn't know what their supply chain was going to be.
It popped out of nowhere. I mean, we're talking about a president that ran on this stuff.
Not where he was going to do 200 countries and he came up with that chart, Johnny. That popped out of nowhere.
I mean, I guess.
That popped out of nowhere.
I suppose.
Okay. So, but the thing was, there was a lot of turmoil. Nobody knew what was happening in April, really. They didn't know what was happening with supply chains. They didn't know what the costs were going to be because that chart, nobody knew what that chart meant or anything, right? And May was more of, we don't know what's happening, but hasn't been as bad as we thought it could be.
Well, yeah, and it's start, stop. I don't know. We're going to do this, but not right now. I'm going to wait on that. I mean, that's more than anything what the tumultuous environment was about. We're going to do it, but not right now. Maybe now, maybe 90 days. We might, maybe that. I mean, that's, let's be honest. That's what caused the
uncertainty.
The real choppy uncertainty is the uncertainty.
Yeah. So, but the thing is, that's real.
Yeah,
it's a real thing. It doesn't matter why, it's real. And it did affect the economy.
And companies aren't spending money.
And here's where the proof is that it affected the economy. Now, whether this is a blip or a trend, we don't know yet. I think we'll know better by when we get through September's statistics, which means October, right? October, early November. We'll have a much clearer idea, I think, where we're going to be as far as the strength of the economy. I think the Fed now will cut the interest rates in September, assuming nothing else happens right now. I didn't think they were going to because the inflation report is still spiking. It's starting to go up again, going down. It's not going down.
I still don't feel like that's coming in September. There's nothing that at least looks to me like
well, right now, if this trend continued, it's so little because we went from 4.1 to 4.2 unemployment rate. Okay,
but unemployment, right? I mean, we're talking stay there in that low fours is where they want it.
It's total sweet spot. But if that trend continued where it continued to go up and it went up so little, I couldn't even call it a trend or the beginning of a trend. But if it went that way and the inflation is going the way it's going, Jimmy Carter time, that's what we're at, right? We're back to Carter Reagan, stagflation. That's what the Fed is so worried about. They're more worried about stagflation than they are about inflation or unemployment because people that haven't lived through stagflation, you don't want to. It's not a fun time.
They don't really have the tool to do much. So they have two tools in their tool shed, and it's either to fight the inflationary aspect, right? Or it's to kind of spur kind of spending, right? I mean, it's one of the two. And when you get into stagflation, you're like, oh, well.
Yeah, because you can't, like, if you raise the interest rates, right? If you raise the interest rates to stop out the inflation part of the stagflation, then your unemployment gets stronger. Unemployment gets stronger, bigger, because the companies
aren't going to spend.
People aren't spending.
Yep.
And that becomes a vicious cycle. So employers start laying people off and don't need as many people, and they don't need to make as much stuff because it'll just sit in their warehouses.
That's right.
So that's that part, right? So then if you drop the interest rate, right? To help increase more fluidity in the market of spending, right? To increase spending.
And
Then you
that
can get
starts-
super inflation.
and then
Then you get
inflation can
super
pop.
inflation.
That's
So
it.
it's a really, really tough situation. So for the idea just to say this is a really easy decision to make and people are moron for not making one decision or the other decision. Nobody expected this jobs report to be reflected of the what do you call it, reconfiguration or
Readjustment.
readjustment
Of
of
the,
the other
numbers.
months. Nobody, I don't think anybody would have expected that we had like 20,000 jobs a month. That would have been big news in April or May if it came out that way.
Isn't there a ton of manufacturing future contracts in the pipelines though? Isn't that common?
I've read a couple of things. I think it was GE had announced that they were going to build a new manufacturing plant for washing machines here, and that was going to create a bunch. I think a couple of car dealers said
there's a bunch. And I don't know all the names, but I think there's.
But the shovel's
billions.
not in the ground yet. So I mean,
Right.
if it, I think that'll be great if it does. I mean, if it materializes.
Well, of course,
that's great.
That's remember it's kind of it's been painted and I don't know why the president's changing course. It's been painted as we got to go through some pain and we're gonna
right.
and then it's gonna get better. And you can't like what was 6 months of pain? No, when you said go through some pain, you meant a couple of years of pain. 6 months is you gotta hold tight, sir. You can't just be like, okay, no more pain, make it stop, because we're not there yet.
I'm not getting that. I remember when he was talking at the beginning when all this stuff happened that we're going to have to go through pain. I didn't get the idea that in his mind he was telling the country to be prepared for years of pain.
Well, I
think realistically,
because your tariffs aren't in place. You have to see the effects of that. You have to see again shovels
but that
in the
isn't
dirt
what he
for
said.
the manufacturing deals. Well, that's the way I perceived it. Because if you're laying out this plan, and this is part of the pain plan to get to the good side,
well, why is
part of the tariffs
that
is to
doesn't make
drive
sense because
manufacturing.
he says the economy is the strongest it's ever been. We have the best
Well,
economy ever.
Right.
So
But
how
when
are we going through pain?
He says that
How are
anybody
we
that
going
knows
through-
is like, okay, sir.
Well, that's what I'm trying to say. So what he's saying isn't what
You can't take 85 to 90% of what he says.
But-
you just can't.
Yeah, I understand, but but you're using it now to say, well, he said, and I'm like, well, he didn't say that. My opinion, he didn't say that.
That's the way. But if you look at the plan with the tariffs to bring the manufacturing back, that doesn't happen overnight. There's some calendar involved there, and if you kind of go, all right, well, yeah. That's if this is the train and that's the head of it and that's the end of it. We have some pain, and it's not 6 months of pain.
I don't see GM building these plants they say want to build when we have these steel tariffs just to build this stuff. I'm not even talking about building the cars, right? You have all these tariffs for the infrastructure needed to build those plants, but more importantly, is they just lost $1.2 billion. They just came out with a report last week that said they lost over the last quarter $1.2 billion.
Well, and I'm not
and
saying
they think over the year they're going to lose over $3 billion.
I'm not saying it's gonna work out.
So how are they going to build the plant?
Isn't there all these billions of contracts and future manufacturing in the pipeline?
I don't know.
It's
I don't
interesting.
know. I don't know. The reason why I'm saying that, what I'm reading is like the deals where these countries are coming in with these $500 billion signing bonuses and stuff. One of the countries that we're saying is committing to $500 billion, their total gross domestic product is $4 trillion, right? So we're taking 1/8 of their economy and they're going to invest it into our country. And there's nothing in writing that says they're going to do this or how they're going to do it or what they're going to invest in. I think right now, a lot of it is hopes and promises and plans without concrete stuff. I want to see stuff breaking ground. Now, I think there are plants I'm not trying to be totally negative. I think there are plants that are being built right now. I bet you if we started digging around, we would see examples of it happening. And that's awesome. And I like the idea of bringing stuff back here too, but I don't think it's going to be as smooth or as easy as they say it's going to be.
Oh, I'm 100% on board, which is again part of the we have to go through the pain. That's and we're in it right now. Because we're talking about interest rates.
Yeah.
Right. The interest rates can change the quote unquote pain for us, the day-to-dayers. It doesn't change much. What it might change is how much credit you can tap into. you know what you make. That's not going to make, if you think that all of a sudden interest rates are going to make your employer pay you more, I don't know that that's a great connection. There's a chance that if the company starts doing better because they're growing, then your pay goes up. But again, going to take a little bit of time. But that doesn't give us a lot of leeway, us, the people, but it does give the corporations a lot of leeway, and the country, and paying its debt back. It gets a lot less expensive.
And so
but it doesn't do much for us.
Right. So getting back to the interest rate part, the actual mortgage interest rates, now we're talking, not the Fed cut rates, right?
Right.
What happened
Two totally
yesterday?
different beasts.
Right. What happened yesterday when that jobs report came out? Plus, on top of it, that tariff announcement that was a day or two before that. I didn't even catch that because I was so busy, and there's so much going on right now. It's hard to keep up with everything.
I'm deaf to tariff announcements. Deaf to it. It's like more.
Well, I find it to be interesting because, first of all, we haven't seen this since 1910s or something like that. So we're seeing something. A tool being pulled out of the toolbox has never been used for a very, very long time.
Sure.
And use it on a massive scale, not just like a little piece here or there. It's like worldwide we're doing it. So to me, it's very fascinating.
I think the latest was India, if I'm not mistaken.
Yeah.
Yeah.
Yep. And but with all of that happening, what we've seen is our interest rates, the 30-year mortgage rate for Freddie Mac, it has been pretty consistent since March. We've been basically at 6.6 to 6.8, basically somewhere in between there, and that's it, like a 0.2 variance for 4 or 5 months now. It's been pretty set it and forget it kind of interest rates. Even this week on Thursday, the Thursday report is a week late for Freddie Mac, so because it's based on the survey they did from the week before. And we went from 6.75 to 6.74 or something, like we went down 0.02. Right?
We didn't.
So we just were flat. But as soon as that labor report came out and all the hoopla about the report and the results of it, and then that guy being fired from the labor statistic, the guy that does the reports, and him being fired, the 10-year Treasury bill dropped. I'm sorry?
Is it a dude? I thought it was a chick.
I don't even know. So much was happening yesterday. I was busy. But that when all that happened, the interest rates started dropping significantly. So I'm expecting to see that we're going to be in the 6.6s next Thursday, right? Maybe even a 6.5, depending.
Really?
We'll see what happens Monday, Tuesday, if they kind of turn things around or if it's going to continue. But what's happening right now, guys, and please listen to me this time because you didn't listen to us last time, but we all said it in this room. They're baking in the drop of the Fed cut rate right now. They're baking it in. The bankers are banking it in. So everybody waiting for this the headline, the Fed drops the rate, you're missing out because the rate's already dropping. And that's what you're waiting for, right? You're not waiting for the Fed to cut the rate. You're waiting for a mortgage rate to drop if you are. Right. We've already said that thing a bunch of times.
We talked about it a couple weeks ago, right? The number that everybody's waiting for is like 5 something.
Yeah, no,
right.
6.0.
Oh, 6.0.
It used to be 5.
Yeah, it's moved up though.
Yeah, moved up. Everybody that was the big takeaway of that.
Yeah.
Back in the day,
it ain't going to 6.
If we have a bad economy, it could.
Oh, sure. But I mean, the baked in. Aspect.
No, it isn't going to drop
bake it down to 6.
No, they're not going to.
They might bake it to
a quarter point, maybe. Right? We might see that, and it could bounce up very quickly. Another different report that comes out that goes the other way, and it can go up pretty fast. It isn't going to stay there for a long time necessarily.
Right.
But what we're seeing is we're already seeing the mortgage interest rates reflecting of what's happening in the national economy, and everybody waiting for that Fed rate. The bankers don't have to wait for the Fed rate to drop their rates. So they'll, the 10-year Treasury bond is the litmus test for it.
Right.
But that's what you should be following right now. And we were at 4.4s, 4.5s for the 10-year Treasury bill. And last night we got into the 4.2s. And let me tell you, every 0.1 basis point, they call it, or whatever, a stasis point, or whatever they call that, basis points. Every 0.1 is not 0.1%. It's a magnifier of the interest rate. So if it moves up 0.1, 0.2 in the 10-year treasury bill,
That's substantial.
it's substantial.
Yeah.
It can be pretty substantial. Mike will know better about this.
Sure.
Let's talk about some. We're going to continue about interest rates and buying when we flip on the next side. We're going to take a break.
Okay.
But what we're going to do, even though that Mike Rao isn't here from the mortgage firm, he's still here because he gave me a really detailed email yesterday. HomeTown Heroes was launched yesterday.
Oh, wow.
So we're going to go over the details of that. It's a little disappointing for some people, but there's other ways to get around that disappointment, and we're going to talk about that. So let's talk about the HomeTown Heroes when we come back.
Very cool. Just launched yesterday, huh?
Just launched yesterday, August 1st.
The green light.
A month late.
The green light.
Yeah, a month late.
Hey, I guess better late than never.
Yeah, and $1 short, but we'll get into that too.
Still could be really life changing for some folks, no doubt. And again,
There's the tease.
kind of shrunk down. This went from really, really narrow, like for the people that could qualify, to really, really vast. And I think it's maybe taking a little breath in, shrinking a little bit. I don't know. We'll find out together, but it still can be very life changing information. And this can be a life changing team for you. Florida Talk Real Estate is a team of pros. Jimmy D's here, but man, do we have so many other professionals, pros in their field that are available for you at floridatalkrealestate.com. And of course, it's that simple. Go there, floridatalkrealestate.com, fill out the contact sheet and get yourself signed in there on Facebook and YouTube. Of course, if you're more comfortable on the phone, pick it up. Call 888-973-7828. You'll find that hotline at floridatalkrealestate.com. Pros, y'all. You should know it. You should use it. You should love it and share it. You can change lives, including your very own. Buying a home, selling a home, stuck with a home, you don't know what to do? Well, let the professionals at floridatalkrealestate.com help you figure out exactly what is going on. That's floridatalkrealestate.com, floridatalkrealestate.com. We're back in 4 minutes. Thanks for being with us every Saturday. It's right here at Florida Talk Real Estate on Real Radio.
What's a Real Radio podcast? It's Real Radio on demand. Find your favorite show at realradio921.com. Real Radio weather.
I'm CBS 12 meteorologist Charlotte Carl. We are expecting another hot and mostly dry day across the region. Now, rain chances will be around 30%. That 30% will be concentrated mainly to the west of I-95. A sprinkle could happen east of 95. Temperatures this afternoon will get into the mid-90s once again.
This report is sponsored by Unbound.org.
At Lowe's, pros save big every day on trusted brands like Whirlpool. And now, Lowe's is the exclusive home improvement retailer for the Whirlpool water treatment product line. Shop trusted brands like Whirlpool and more in store and online.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rao from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rao will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rao, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Camaronets, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
You're listening to Real Radio 92.1, and we are an iHeart radio station. This is Florida Talk Real Estate with Jim Paola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
Yeah, 877-927-6969. That's toll free. Of course, if you dial that in with your questions, comments, concerns in the world of real estate, is it working? It's good. Yep, that one's working.
Yep.
Yeah. Jimothy, you're going to answer that if they call, right?
Damn right I will.
All right.
Good morning.
Good morning to you. I hate putting, all this weight on you. I'm not going to just assume that you're going to do it.
Oh, my shoulder.
Yeah.
Oh.
Well, I'm going to ask.
We're good.
I'll make sure.
Mhm.
If you dial in, Jimothy he'll answer it. He'll probably get your name. And I'm assuming you'll then put him on hold and then maybe let him get on the radio.
Yeah. Try to find out what they want to talk about so
All
we
right.
know going into it.
All right.
So
That sounds fair.
not a full screen. We don't ask you for your social security number or anything
Right.
big like that. Just a name.
What kind of manties are you wearing?
Yeah.
Yeah.
Well, sometimes.
What you got on this morning?
So, what are you wearing there, Rick?
Cargo shorts. But yeah, real simple process. And we are live on this Saturday. Today's the 2nd of August. I can't believe it. Kind of August is August the official start of hurricane season for you, Jimothy?
Actually, you know what? I usually
You
go
wait
by
till September.
Yeah, because that's when we really. When we get clobbered, it seems to be from about very late August, maybe, to through October.
So once me and my wifey were married towards the end of August. And once we hit our anniversary, that's when I'm like, oh, here we go. Strap in.
Yeah.
Go time.
Yeah.
It's
Been pretty little activity, right? I haven't seen a whole heck of a lot of
I think
tropical storm activity at
it's
all.
been kind of normal start.
Right.
Yeah.
Okay.
Yeah. Just
Last year we had something out there in early May, if I remember right.
well, I think you're right.
Yeah.
I think we had something named.
It didn't turn in anything, but it was out there. So
I think everything so far, although we haven't had any effects, but like North Carolina and like what was it, Texas?
Mhm.
Yeah, I mean we've
the
had
flooding.
weather. Yes,
Yeah,
plenty of
the
weather.
flooding.
Jimothy, that's him. I'm Johnny. Of course, our fearless leader, 13 plus years now. I've told you, he does run a top producing Keller Williams team. The Florida Home Pros team is at Keller Williams Innovations. Jimmy D's right there. There he is. Jim DePola. How you be?
Hey, I'm doing good, guys. Happy South Florida, everybody.
When is it kicking for you? Is it late August? Is it?
It's so funny. I was laughing when you guys were talking about this because I haven't talked about hurricanes since the hurricane season started. First, because Ross wasn't here at the beginning of the season. And second of all, you always give me grief for talking about it, for jinxing the community. So I literally have not talked about this. And now you guys are talking. It's like, oh, I'm allowed to talk about this.
Yeah,
now.
it's official. It's like August. Like you got to be like, hey, you got your preps? Come on.
I
You live in
know
Florida.
that they say that September is really like the height of the season, but I always feel like it's August.
If you look at the graphs, though, if you look at the graphs, like historically,
I know
it just
But
absolutely peaks.
I always
as we
feel
get to
like
September.
August because for whatever reason, I got it stuck in my head. That's when Andrew hit. And Andrew was like a really big one, and that was August 24th. I actually remember the date.
Wow.
It's like the hurricane.
And, yeah,
Yeah.
and
Changed
so,
everything.
Yeah, and because we, before that, I think like the strongest one that I remember was like David, and that was like 77 or something.
Right.
Like that.
Yeah, Andrew was
So
devastating.
yeah, but and that
yeah.
was in August. So I always think August is the month. But you're right. Historically, it's really been late August, September is the height of it. So we're getting there. Supposedly, we're going to get more activity, according to the.
There's a ton of Saharan dust.
Yeah.
We're right now we are.
Oh, well, that's good.
We are blessed with a blanket of Saharan dust, and that they're just not going to pop off with all that dust. Those are
Right.
storm killers.
That's still pretty heavy right now.
Oh, man.
I
Yeah.
about a month ago or so I read that and I was like, okay, well that's good, but I didn't know if it lasted.
It was a couple days ago. Mike's weather page, good old Mike. That dude's amazing. He put out a comparison year over year of how the dust shear coming
Shears,
across
right,
was.
right.
Man, it is just a wall coming off of Africa.
Right
So
now.
for us, we're like, go.
Yeah,
That's good.
exactly.
We need if we can get through this year without any major, knocking on wood here, major hurricanes, especially on the West Coast or the East Coast, obviously. I really feel like our insurance is going to start stabilizing even more.
It'd be great.
I don't just do really quick insurance stuff because I want to, let everybody know that as Johnny said before the break, we got a great team here to help you with all kinds of things. So Ross Camaronets from Brightway Insurance, Juno Beach, is your insurance guy. We've been saying that we've been seeing mostly good news coming out from insurance, premiums going down a little bit or staying flat.
Yep.
I was talking to a guy this week who said he just did an insurance renewal with one of his insurance companies, and it only was $17 a year more for the whole year. It was only increase of 17, so that's pretty flat.
Yeah, very much. So.
And Ross just did one where somebody saved $600 a year on their insurance because of the rates getting flatter. We did see one of the insurance companies ask for a 31% increase for
That's
their
substantial.
Florida people. It's only one company. It isn't like it's an industry-wide thing. The insurance regulators haven't said yes or no to that request.
Yeah, just because they asked doesn't mean they're going to get.
Doesn't mean they're going to get it.
Yeah, and that is a substantial raise too for those poor people.
Yeah. So if you have any questions about insurance, it might be a time where you can actually save some money. $600 a year, that's $50 a month in your escrow payment.
Love that.
Right. So if you want to reduce your mortgage payment, one of the ways to do it is to see if you can get a better premium on your insurance. So give us a call. We'd love to work with you on that. We do it all the time. It's free just to get the information. And then if you like the information you get and the numbers work, then you hire Ross, and Ross will make it happen for you.
That's right.
Also, Mike Ralph from the mortgage firm. We've had a lot of people call over the last 2 weeks looking for mortgages for buys and refis. Mike's really good at that. Really good resource for information. And also, he's very good about giving you advice on how to improve your credit score. And what I've learned over the years is hiring a credit score company or credit repair company isn't really the way to go. I haven't seen really good results for buyers trying to improve by using those type of companies. Mike's down to earth advice on how to get your credit repaired. I've watched him do really amazing things in a pretty short period of time if people just followed his advice. And you know what the advice is? Pay down your debt, right? Pay down your debt to certain numbers. He gives you a number. Like if you have a $2,000 limit on your credit card, you guys, get your credit card balance down to this and don't let it go above that anymore. The other thing you can do, other than making any late payments if you have late payments, make those up, then reduce the amount of the debt that you have. And the third thing is get new credit. And by getting new credit, that's one of the fastest ways of increasing your credit. Even though you have bad credit, getting new credit can help you. And I know that sounds counterintuitive, but it's way faster than hiring those companies trying to fight with your creditors saying, hey, I know I didn't make a payment for 6 months in a row, but I'm ready to pay now. Will you take it off my credit history that had late payments?
Right.
It's much easier just to build new credit and get your old credit fixed. And it's free. You're not paying anybody. You're not relying on anybody. Mike just gives you the example what you need to do. It's a really great thing. The other thing is we've had a bunch of people call this week and last week with legal stuff. So we've had people call asking for living trusts. Went to Paul Krasker, the law office of Paul A. Krasker, who's a great resource for all of our listeners out here.
Wonderful.
So people have called about that. They've called about title issues. I've had people call about trying to evict people out of a property that they own. All of these things, and we're the resource for you for that. We get you to the right people. I have somebody who called yesterday, who condo board is charging double what they said they were going to charge for repairs that need to be made to this condo for those new state regulations.
Yeah.
Well, they think they're being ripped off, and the condo board won't show the books. They won't show why it's double. The condo people are thinking now that there's kickbacks involved, and that the condo board's getting kickbacks, and that's why they're charging so much money. So they're looking for a lawyer to see what their legal rights are. So we were able to give them referrals to two people. We gave them to Paul. I'm not sure Paul's going to be the right one for that. So I gave them a second attorney, that Andrew Wyman, who was the construction lawyer on the show.
Right.
I feel between Paul Krasker and Andrew Wyman, they can at least refer out to the people that they should go to. And I actually have a third attorney. So if those attorneys don't work out for them, I have a third one that might work. And we do these resources things for people for free. It isn't like I charge you to go find the attorney for you. We just give you the resources you need. We do the same thing with contractors when you need contractors and stuff like that.
That's right.
We have them. We had a guy just recently had to have a roof repair and an AC repair. And, we had the contractors, reputable people ready to go for both those things. Another one
by just going to FloridaTalkRealEstate.com, you get one of the pros on the team, or of course amazing referrals of trusted resources that are we'll say vetted. I mean, in a lot of ways, because these are people that we trust and feel like we can put that trust for you as well. FloridaTalkRealEstate.com.
And I also want to mention that not using some of the people we refer out to can really hurt you. And we had a lady named Diane. We're selling a property that she owns in Stewart. She moved to a different state. I gave her our preferred moving company. I don't make any referral fees from this movie company or anything, right? I just know they're reputable and they do what they say, and they shown up, and the other customers we've referred them out to have been really happy. So I gave Diane that moving company. She ended up moving. I talked to her yesterday. She got her furniture yesterday. It's been held hostage for over 12 days because she didn't hire the company that we recommended. They hired this other company. The other company wasn't a real moving company. They were a broker, so they don't have any moving experience. They just, they're like a lead generation system for moving companies, where they put out advertising. You call them up. You think you're talking to a moving company. They give you a quote. They're not going to be your mover.
They're like travel agents for movers.
Exactly. They're brokers for movers. So what ended up happening was this lady they put the stuff on the truck. They moved it up to the state that she moved to. And then they said, sorry, the weight of the stuff is way more than we thought. And they ended up charging her 40% more than what they originally quoted her for. Or she wasn't going to get her furniture back.
That's criminal.
Right? Held hostage. So welcome to that moving world. It's a very nasty, dirty world if you don't know what you're doing.
It's criminal.
So finding a reputable mover is really, really hard. And we've had a lot of movers on this company that have been sponsors of the show. And if you notice, we don't have sponsors on the show for moving because we couldn't find a good moving company that really gave great customer service. We kept getting complaints. And I can't put people on the show if they're getting complaint after complaint after complaint.
Right. Everybody could do a couple of good jobs.
You have yeah.
Can you do it?
And people and sometimes people make mistakes,
of
right?
Of course, yes.
But if you don't step up and handle the mistake and own up to it and try to pass it on to somebody else and everything, I can't in good faith refer you to people that listen to the show.
Right.
So if you need any of that, we're here for you for that.
FloridaTalkRealEstate.com.
Now, that being said, we're going to talk about something that will help people. Here's another thing that help people is the Hometown Heroes program was finally launched yesterday. It was a month late. And when I say late, it's always for the last, I think it's been out 4 or 5 years now.
Has it really already?
It's either 3 to 4 or 4 to 5, and I can't remember. If Mike was here, he would know, right? Mike. So with the Hometown Heroes program, they came out a month earlier because they reconfigured the whole program, and it went more back to the basics as you were talking about before the break. So the way the program originally worked, it was $50 million put out, but there were only certain professions. At the time, I think there were like 50 professions that would be eligible for this money, and that's why they call it the Hometown Heroes program, because it was supposed to be workforce housing money so that people that lived and worked in our community and helped support all the community services that they had money so that they could live here. And what you would get is 5% of the loan value of what you were borrowing, you would get back to help pay for closing costs and down payment up to $35,000. It is basically a zero interest loan is what you're getting, because you do have to pay the money back, but you don't have to pay it till you sell it, refi it, or move out of the house and turn it into a rental. It's not your homestead anymore.
Right.
You're supposed to pay the money back, but with no accrued interest. You just pay back what you borrowed originally. So even if it's 15 years from now and you had $22,000, all you have to do is give back the $22,000 with no accrued interest.
Right. So it's one of the more beneficial down payment assistance for sure. It really is.
It really was. And then what happened was became so popular they expanded it to $100 million, and then they started expanding the employment. So at first it was basically, and I'm glossing over stuff, but it was teachers, firefighters, police officers, hospital workers and medical workers, government employees, like if you work for the sanitation department or you were a clerk at the city hall or something, all of those would be covered. So that was all workforce housing, right? But then it became, as long as you were employed by an employer in Florida that was based in Florida, and you were employed by somebody in Florida, you could get the loan too. And when it became like that, it became so popular that 100 million would go in about 10 weeks.
Yep.
About 10 million a week would be spent. And then after 10 weeks, the program was over. So we were gearing up in our summer buyer's guide a few months ago saying, get ready for this because you want to be part of that money. Well, they unexpectedly put the hold on the program, pushed it back a month to August 1st. They scaled back from 100 million, which had been going on for 2 to 3 years, back to the 50 million original that they had set aside. And they scaled back to all the employers again. Now there's still like 80 employers that employment positions that you can still get the program, including things like chiropractors and chiropractor assistants. They're still there.
Huh.
But people like me, who's just a realtor, a self-employed realtor, I wouldn't be qualified for that, even if my income was okay within the standards, because I'm not the right profession. So that program is great. I have a public school teacher, Kaylin, who's trying to get qualified for a loan. We're really hoping that she can get into that program, which would be great. Public school teachers are perfect candidates for this stuff.
And you do have to be a first-time home buyer?
Yeah, you can't have owned a home for you can't have owned a primary residence for 3 years.
Right.
Okay. I don't know if you could ever have not owned a home under FHA. You can't have owned a primary residence for 3 years, but with FHA financing, you can still own a rental property right now and still get first-time home buyer FHA program. I don't know if it works that way with Hometown Heroes. Well, that's a great question to ask Mike when he comes back in town. But Mike wanted to let us know. He sent us an email since he was going to be here. He's like, hey, Hometown Heroes is out. So here's the thing you need to know about the Hometown Heroes. It isn't for everybody anymore. There's less money available, but I think it will take longer for that money to be used up. I think it'll be longer than a 10-week program because there's less people that are qualified for that money. Way less. Think about it. It went from if you worked in Florida and you were employed by a Florida employer, you could get this program, right? Now, if you have to be within 80 professions in order to get the program. So not everybody's going to be able to use it, but the ones that do, it'll be a great opportunity for them. They probably won't have to feel as rushed to get the program. And it's a pretty easy program to apply for. So Hometown Heroes is out, guys. If you want to know more about it, give us a call. We'll walk you through the whole thing.
That's right. FloridaTalkRealEstate.com.
Now, the other thing is that if you can't use that program, because there were a lot of people, I'm sure, this summer that were planning on using this program and can't, there's still another program that's out 24/7, 365 days a year called the Florida Bond Program. And with that program, it's very similar to the Hometown Heroes, except there's no profession requirement as long as you work in Florida and are paid by a Florida employer and you're a first-time home buyer, you can get this program. But what it is, it's a $10,000 flat amount. So whether you buy an $80,000 condo or a $400,000 home, you get $10,000 from the state of Florida to help pay for your closing costs and prepaids on the purchase. The Hometown Heroes program is better because if you're buying a higher priced home, you can get, a lot of people were getting $20,000, $22,000, $25,000 in that program. With the Florida Bond, you get $10,000 flat no matter what, but
Right.
$10,000 is a lot.
It is.
And if you were buying a townhome or something for $250,000, $300,000, $10,000 is probably at least 1/3 of what you would need to bring to the table, including down payment and closing costs to buy a unit. So you're getting 1/3 help from the state of Florida. And again, it's like a zero interest loan. You don't have to pay it back until you sell the house or you refi it or you leave the house and not make it your primary residence anymore. But you're only paying the $10,000 back no matter how long you keep that money. You're not paying any accrued interest.
Yeah, that could be the difference between someone being able to and not being able to get that townhome or whatever home you're dealing with. So
Yeah, so it's really important.
valuable resource.
So anybody that is interested in that, give us a call. We'd love to talk to you. I thought we would talk about this one thing because I found it to be very interesting.
You want to do it on the other side of the break?
Yeah, let's go ahead and do that. Let's go on the flip side. And if anybody wants to call, Johnny.
877-927-6969. That is toll free. Questions, comments, concerns in the world of real estate. You want to be involved with the conversation at hand. Don't be shy. You're more than welcome to join us. We are live on this August 2nd. Great to have you with us. Of course, if you're not comfortable on the radio, believe me, I understand. You can always go to FloridaTalkRealEstate.com. These are pros. You get experts in their field, all of them, at the one-stop real estate shop. It's FloridaTalkRealEstate.com. Find them on Facebook and on YouTube. Lots to consume. Florida Talk Real Estate on Facebook, Florida Talk Real Estate LLC on YouTube. There's a ton of informational chunk videos to consume, and do that. Know it, use it, love it, share it. You can change lives, including your very own, with the pros. FloridaTalkRealEstate.com. We're back in 4 minutes. Thank you for being with us every Saturday. It's Florida Talk Real Estate right here, Real Radio.
Be like the smart kids, like the summa cum laude of your workplace.
What?
Tell your smart device to play Real Radio 92.1 on iHeartRadio. Here's what's happening with the weather on Real Radio.
I'm CBS 12 meteorologist Charlotte Carl. We are expecting another hot and mostly dry day across the region. Now, rain chances will be around 30%. That 30% will be concentrated mainly to the west of I-95. A sprinkle could happen east of 95. Temperatures this afternoon will get into the mid-90s.
This report is sponsored by Mothers Against Drunk Driving.
For victims of drunk and drug driving, our grief is unique. But you are not alone. You always have a place at MAD. Call our 24-hour victim helpline at 877-MAD-HELP or visit mad.org.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rao from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rao will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rao, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Camaronets, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
The Anajar and Levine Accident Attorney Studios.
Have you been in an accident? Call Anajar and Levine Accident Attorneys at 1-800-747-FREE.
That's 1-800-747-3733.
Real Radio 92.1 is WZZR West Palm Beach, an iHeartRadio station.
Make us the #1 preset on your car radio and on the free new and improved iHeartRadio app. Listen for all your music, radio, and podcasts. Free never sounded so good. This is Florida Talk Real Estate with Jim Paola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
Yep, that's it. 877-927-6969. Toll free. We checked the phone lines earlier. They are absolutely operational. You're more than welcome to join us live on this Saturday. It's August the 2nd. Great to have you with us. Johnny C., that's me. Jimothy's our producer extraordinaire. What's up, my dude?
Hello, and good morning.
Is Locker Room live at 11?
It is live at 11 o'clock, yeah.
Excellent. Got a lot going on. You know, football started.
Football's coming up. As a matter of fact, I just printed out the Gators schedule last night, so we'll be carrying those games coming up pretty soon here on Real Radio.
Go Gators. Just rolls off the tongue. Go Gators. Yeah. Real Radio's been home to the Florida Gators for a long time now.
I mentioned that to our fearless leader here in the before you had gotten here this morning. And Jim, you were under the impression Gators have a pretty good team this year. What do you think, Johnny? I mean, you have the real pulse on what's going up.
I am a homer, dude. I am 100% homer. I go into every year going, this is the year, baby. There's not a ton of national expectation for the Gators, for sure.
Okay. No. All right.
I think there's a ton of promise for the team, though. I think that defense can be rowdy as hell. And, man, when you got a couple of players that can pop like the Gators do, you never know, man. It's just such a tough conference. It's top heavy. There's some loaded ass teams up top. We'll see. We'll see.
Who's the big team this year. I mean, obviously, like Georgia has been for a long time. Ohio State, Michigan.
It could be the Texas year to take the dominance.
Okay.
Yeah, it could be. We'll see. Young quarterback play over there, but anytime you got a Manning, there's a chance.
Sure. Yeah. Well, there's of course, with the portal, it's just so hard. I mean, if you don't study it the way guys like you do and Greek and Joe, I mean, you really got to pay attention because they just move around like crazy now. And I heard some, I'll get into something else on that later, but unrelated.
And they sure can have some movement. That's for sure.
Yeah.
That freed up the players. That's no doubt about that.
A small little where I was going to go on a side bet there. I wanted you to finish that up, but I heard in Ohio they're trying to make prop bets illegal. The governor there wants to make prop bets illegal because of the aspect of how it affects players playing. Like they'll do certain, they'll play differently in order to pad stats or unpad a stat because of the betting aspect of it.
So they want to make it illegal just because of the potential for impropriety?
Yeah, of prop betting only.
Interesting. It is one of the more one of the easier ways to infiltrate somebody, make them part of the play for say, buy somebody in, right? Make them aware, give them a taste. And one of the easier things to control would be their own stat line.
Sure. Here's 10 million, strike out.
Yeah.
Or whatever.
Possibly.
You know what I mean? That's a simple way of saying it.
Exactly. Now, if it's positive stuff, that's hard to do. Like, you have to have 5 receptions as a wide receiver. Well, your quarterback has to throw it to you at least 5 times, and you got to catch all of them, right? So, I mean, there's some things where you're like, it's not totally in play, but you get the quarterback involved, and now he's going to decide who he's going to throw it to whenever he wants it. And that's
I'm thinking more like at the Super Bowl or something, or maybe it was a college national championship. They were betting on whether the person was going to be doused with what color Gatorade.
Sure.
That could be set up really easy.
Of course.
You could just set that one up really easy.
Well, even national anthem. You want me to do a quick one, or you want a long one? What do you want? Because there's only 2 sides to that. Bet, right? Yeah. You want a long one or a quick one?
Well, I think there should be a prop bet about whether the prop bet's going to fail or not.
That's interesting, and I like it. I would bet on no, especially if they let the people vote on it. Now, if they're just going to legislate that out, I can see that happening.
Yeah.
That's interesting. Jimothy, Johnny, there's Jimmy D. He's our fearless leader. He runs a Florida Home Pros team, Keller Williams Innovations.
I do
prop betting over there.
I didn't.
I'll prop bet you might play some cards this weekend. Maybe.
Yeah. I can't believe I just lost it.
What'd you do? Your mind? Where'd it go?
And I really wanted to talk. Well, we're going to talk about it anyway. I'm going to do it off the top of my head.
Good. You read it, right?
Yeah. So, it's almost been a year. In fact, August 16th will be 1 year since they changed the regulations for the National Association of Realtors.
God, it's been a year
It'll
already.
be August 16th will be 1 year where they were trying to change the way that commissions are structured in hopes of reducing commissions. Now, Wall Street Journal came out with a report, pretty big report, like a couple weeks ago, talking about the first 9 months of what happened, and what they found out is real estate commissions went up slightly, right? After this law was created, and now
that was not the intent. By the way,
it was not the intent. Nope. They were hoping to reduce it. Now, here's something that I just read that was interesting in this article from the Las Vegas Review, because they were talking about Nevada and what happened with interest, with commission rates once this thing went into effect. But they said that they named 4 other countries like Britain and Netherlands and a couple other countries, and they get anywhere from 1.5% to 3.5% for real estate commissions in those countries. That was surprising to me because I didn't know about that because I don't do real estate in those countries.
Right yet.
And in the United States, it's between 5 and 6%. It's how long, at least I've been in the industry for 13, 14 years as a realtor, and then another 5 or 6 years as an investor working with real estate. And 5 to 6% has always been kind of like
customary.
The fluctuation dependent on the market, but that's what it's been.
And it's been that way even well before that, too.
Yes, I think so too.
It feels that way.
Right. But now I understand why the DOJ had such a strong opinion that they wanted this crushed. because they were thinking that we're being charged 2 to 3. In America, agents are making 2 to 3 times per transaction as these other countries. So what happened is the rates did not go down. And what the rules, it was basically 2 simple rules. This new rules were, number one, sellers could no longer advertise on the MLS how much that they were offering buyer's agents if the buyer agent brought them a qualified buyer. So before, the way it worked was Johnny wanted to sell his house, and I would say to Johnny, how much how much real estate commission? Let's say I asked Johnny for 6, and if Johnny said yes to 6%, I would put in the contract, I'm taking 3%, and I'm offering 3% on Johnny's behalf to advertise, to say to other buyers agents, hey, Johnny's going to offer 3% if you bring him a qualified buyer, right? If Johnny negotiated with me, we took a lower commission, let's say 5%. I would normally do 2.5% to me and say to the world on the MLS, Johnny's offering 2.5% to a qualified buyer's agent.
Can't do that anymore.
Can't do that anymore. You're not allowed to put it on the MLS, but you can put it anywhere else. So if I wanted to advertise on social media and say, hey, Johnny's offering 3% to a buyer's agent, that's legal. Now, this was supposed to be help for transparency. So tell me how that's transparent. I don't know, because what has happened in that year, what used to happen before August 16th
was this Merrick Garland's DOJ?
Yes, it was under Biden. It was under the Biden administration. So, but it's been going on for over 6 years. So I don't know if it started under Biden. It might have started under Trump, and then it continued under Biden. Biden
6
finished.
years. It wasn't under Merrick.
It was going on for at least 6 years, at least 6, right? So this has been going on a long time underneath, and it just bubbled up when they came out to these rulings. So what happened they thought it would reduce cost to sellers, because now the sellers were being told, hey, you don't have to offer any commission if you don't want to a buyer's agent. Let the buyer pay the buyer's agent. If you want to do that, you have that right. You always had that right, but they felt it wasn't talked about clearly enough. Now, in Nevada, they were expecting this to reduce interest rates. So the Las Vegas Journal Review just did a study, and we went from 5.32% average commission paid per transaction to 5.44. So we went up 0.12, right? So basically remained flat. Everybody's having a conniption fit because everybody's like, oh, well, we changed these laws. Why hasn't the commission rate dropped? And it's very simple. People have to understand the law of supply and demand. And right now, there aren't as many buyers as there are sellers. So the sellers need the buyers. So how are you going to attract a buyer if you're telling the buyers, hey, by the way, Johnny, if you want to buy my house, you're bringing a real estate commission, you're going to pay your own real estate commission. I don't want to pay any of that for you. So if you're going to bring in your representation, you pay for your representation. Then most buyers in today's market, because there are way less buyers than the amount of houses for sale, a lot of buyers like, if that's the way you're going to be, I'll go down the street and buy the other person's house who is offering a real estate commission to my buyer's agent.
That's crazy. It is weird when you frame it like that, and I get that's the only way to frame it. But like, if I like this house and I really like this house, I'm not going to not buy it because I have to pay my realtor's commission, right? That if that's my deciding factor, if I can't afford it, I understand that, right? I get that. But if I'm like, well, I would buy this house, but I'm not paying my realtor's commission. That's a weird.
But here's what the federal government did to you.
That's a weird place to be, right?
Right, and what the federal government did to people in that situation, when I say to you, like, if you were dealing with that, right? Before you get to see the house, this is rule number 2. Rule number 1, sellers can't advertise on the MLS what commission, if any, they're paying. And number 2 is buyers have to sign an agreement with a buyer's agent before the agent can show them the property. Now, I had a customer a few months ago that I had done a couple of deals with in the past, really helped him out a lot. I've always done very good for him and even helped a relative buy a property through me. And then he needed to buy another property. And we never really had serious buyer's agreements at that point because we had a relationship. It wasn't required. And I felt like, and we weren't worried that the seller wasn't going to pay a commission. But now, if I took you out, Jimmy, to go see a house,
Right.
and you didn't sign an agreement with me before I opened up that door, right, saying that you're hiring me to be your real estate agent, if you don't have that form signed and I open up the door and show you the property, and the seller or the listing agent finds out about it, they could file a complaint with the Florida Real Estate Ethics Commission, and first time penalty, $5,000 fine.
Oh,
$5,000 fine, first time penalty for opening up the door without an agreement. So I had to explain to this person, hey, I know that we haven't done this in the past, but we need to sign a buyer's agreement.
Right.
They didn't want to do that. And they go, I'm sorry, I'm not going to do that. Like he thought he had a choice. And I go, well, you don't have a choice if you want to use me because I'm not going to risk a $5,000 fine because you don't want to sign a document that's federally required now. And I go, this isn't mess around time. And it isn't going to change. I'm still going to ask my commission from the seller. So I'm not asking you to pay the commission, but we have to talk about commission. You have to sign this document. He didn't want to do that. He goes, I don't want to be fully committed to you. And I go, I totally understand that. Then I can't show you the properties. And we were scheduled to show the properties the next day. And I had a pass. He ended up working with Mike and closed the deal with Mike. And he found another agent that didn't require that. So they risked the $5,000 fine. And I wasn't going to do that.
Is that happening a lot, do you think?
Oh, yeah. Agents go all the time showing properties without getting any kind of buyer's agreements at all. It happens all the time. It's still happening.
And that's
And
against
it's totally against regulations. I don't want to say illegal because it's not a law. They're regulations, not laws, okay, that we're talking about. But you're breaking the regulations which are required for your state license.
So, but the only way that regulation can be enforced is if someone else makes a complaint. That's
that's the way you would find out. Now, brokers,
how would they know? How would they know that they don't have a buyer's agreement? And isn't this a workaround?
Well, here's the thing. Let's say we don't sign a buyer's agreement. I take you to the house, Johnny. You love the house. I call up the seller or the listing agent and go, hey, my buddy Johnny wants to go buy this house. How much are you paying for real estate commission? They go, we're not paying any buyer's agent commission fee. Then I go back to you, Johnny, go, Johnny, I'm sorry, they don't want to pay a fee. I try to negotiate it. If you want that house, according to our agreement that you signed before I showed you that house, it states how much real estate commission I'm expecting to make. And if I don't get it from the seller, it says in the agreement, you're supposed to pay me.
Right. But the question was,
but then you say, but you haven't signed an agreement with me.
Oh,
right. Let's say you haven't because I didn't do the right thing. Right. You're going to rat me out.
Yeah.
You're going to go to the sellers and go, hey, I never signed an agreement with this guy. I just want to work with you directly.
Well, but to have that conversation knowing you haven't signed an agreement would be foolish from the realtor side, right? I'd be like, hey,
no,
the agreement you
would go directly to the seller and go, hey, I don't want to use my buyer.
Why not just sign a 1-day buyer's agreement?
Well, I just read yesterday that there's things called touring agreements, right? Which I used one time because the person wasn't ready to hire me fully. So what we did is we wrote down each property we showed that day and basically saying, look, you're not required to work with me full time, but these 5 properties, if you come back to buy them, I'm your agent.
Yeah, because I think
I heard that I just read that is not legal.
Why? So for me, the absurdity I think regulation has its place. This is like absurd regulation because any realtor that wants to put themselves in a position to where they don't have an agreement with somebody they're going to schlep around and show a bunch of houses to, if they choose to do that to themselves, they should allow that to happen, right? Because really, they're only hurting themselves.
Yeah.
You're not going to go around all day showing houses to somebody you don't have an agreement with. Not on the regular, because you know what you're going to end up with? Nothing. You're just wasting your time.
The difference is now, though, there was a full expectation that the seller was always going to pay the buyer's agent fee.
Sure,
but now that
just
isn't
just the bare bones of taking time out of your day to go show properties to somebody without a contract is kind of silly.
Well, you know that we don't do that because you used to work with us in the office, so you saw us writing agreements all the time.
The agreement is everything for you, because
Right.
otherwise you could absolutely just be abusing your pass into that home, because they have to have a realtor to go see these
You
homes.
show them 20 properties and you call them up one day and you go, hey, I found another property for you to go to see. And they go, oh, I'm sorry, I found one on Zillow and I already worked.
And I bought it with somebody else.
Yeah. And you don't have an agreement. You don't have a leg to stand on. So the agreements were important, but they were really more important to lock in that the buyer was working with the buyer's agent as a full-time exclusive arrangement. But now it's also about the money. And the reason why the mortgage rate, the reason why the commissions have not dropped yet, and they will drop, okay? It's going to be a life of the cycle of the market. When we're in a strong seller's market, there's going to be way less buyer's agents fees paid and offered by the sellers because they won't need them. When you have 15 offers on the table, when you're in that kind of market, put the house on the market and you have 15 offers in 72 hours, you know that one of them, from the seller's perspective, are willing either not to use an agent to represent them, and that way they don't have to pay a fee, or that they're willing to pay their buyer's agent fee if they choose to have one, because the market's so tight for the buyers, they just got to eat it.
That's right. That's part of your closing costs.
And then the sellers are going to have an advantage in that market. But when the market slides where it's more stronger for the buyer, the sellers need those buyer's agents, and they should be willing to pay a commission to get those buyers out there to get as many as they can to find the one that wants to buy their house. And it's a cost of doing business.
And that's part of the cost to make sure your house goes. That's right.
I've never seen any other industry controlled price-wise like a regular industry. Can you imagine, and maybe there are regulations like this and I just know, but can you imagine the federal government telling car dealerships how much they can make per car? Like, you're not allowed to make a certain amount of profit. We're capping your profit of how much you're allowed to make, because we think it's unfair that the purchasers are paying too much money, right? You don't do that in any other industry, but this industry, I mean, they don't do it to lawyers.
We're trying to do it to the pharmaceuticals. A lot of people would be 100% on board with that.
Yeah, you don't do it to the lawyers.
True.
And it's the same kind of thing. It's a service industry where you're offering a service, not a widget. You're not buying something from me. You're buying my expertise, if you will, and my experience, right? Just like a lawyer. Can you imagine if they came out and they said lawyers' fees are capped, like crazy capped? I know there are capped because you can abuse and they stop the abuse.
Yeah.
But it isn't like where they just say across the board without seeing it on a case-by-case basis, you shouldn't get more than this. And I don't think it's right for the federal government to determine. I think it's right for them to protect consumers.
Yeah.
Right. And that people should be educated and understand what's going on.
That doesn't feel like it's the concern, though. There are agencies like the CFPB. There are agencies that are put in place to do just that they just keep sawing their teeth off of. So that's not the motivation. And maybe they could veil it in that, but I don't believe that to be the case. I don't know what the motivation is. I can't just be to harm realtors.
Well, they actually, the attitude is they feel that realtors have like almost a monopoly on these commissions, and that they're they're in total control. So I know, I know, but that's the way that people, that's the way that regular consumers look at it. And, real estate agents, if they do it right, you can make a lot of money as a realtor, but the amount of money
between an agent and a realtor.
Okay. So an agent, you have a license to operate in Florida as a real estate agent. A realtor is like joining a union. Okay. And a realtor, when you're a realtor, right? And there's a little asterisk or whatever trademark thing with realtor, that means you've joined a group, and the group has certain standards that you must uphold. As a real estate agent, you don't have certain standards you must hold other than state law, right? You can't commit fraud, can't lie to people, stuff like that. But as a realtor, you have a higher standard, right?
all right.
So what does that mean? If I'm a realtor and I'm showing your property, Jimmy, and I'm the buyer's agent, I have full responsibility to keep your property in excellent, in the same condition as when I walked in as when I leave, because I'm a realtor, and that's a standard National Association of Realtors.
Okay. All right.
Being an agent, I don't really have that responsibility, right?
They're
So
still,
there's
they're
all
still
these
affected
things.
by all the regulation, right? None of that changes.
State regulations, but then there's a higher regulation, extra regulations that realtors must uphold. So you could not violate a state regulation, but violate a National Association Realtor regulation, and they will censor you. They'll kick you out of the group or fine you or do other things. They'll sometimes refer you to the state. If they find out a problem the state hasn't learned, they might refer you to the state for investigation through the DPPR.
And of course, you want to be that because then you can sell yourself to people that, hey, I have a higher standard.
Right.
So that's a motivation to use you as as an agent.
Yeah, and here's another little sign that I'm seeing, because what people don't realize is in today, like there's 1.55 million realtors as of the end of 2024 in the United States.
Realtors.
We got as high as over 2 million. Now we're at 1.55, right? So 1.55, no, real estate agents, not just realtors. Okay, so everybody, right? But out of the maybe it is realtors. I'm not sure. But the 1.55, 70% of them last year did one deal or less. One deal or less last year, right?
Right.
Normal in Florida was between 8 to 12, and then it slid to 6 to 8. Now it's like 1, right? You don't know how many agents are calling me up trying to show my properties who don't have a super box, right? The super key. That's an electronic key that only real estate agents can get in Florida, and you have to be a realtor, right? You have to pay the higher standard, and you pay like $8 a month, and you get this app in your phone that only realtors can get. And the app electronically communicates with the lockbox to open up the door. Now that lockbox, I love those lockboxes because they're security protection for the seller. Nobody can get in that lockbox if you're not a licensed realtor paying the $8.99 a month. So
and I'm
I
guessing it stamps it with your ID when you pop it.
Jim DePola from Keller
It
Williams
knows
walked in
what
at
time.
1:13
That's right.
p.m. and he locked it up at 2:09 p.m. Right?
Right.
The other thing is that so you have all those kind of protections, right?
Right.
Now, a lot of realtors, what they'll do is they go down to Home Depot. I was guilty of this when I first started out, and I would buy these $40 Home Depot lock boxes. I'm calling Home Depot, but anywhere, right? And they had like ABCD for the codes or 1, 2, 3, 4 for the codes, and people use them. Well, anybody can use them, right? So if I put one of those type of lock boxes on your house and the realtor's lazy and they schedule a showing and it says the code is 1, 2, 3, 4, they don't even have to go. They could just call up Jimmy, the buyer, and go, "Hey, Jimmy, I don't feel like going out there today, but it's on a lockbox code. So just punch in 1, 2, 3, 4 and go take a look at the house and then tell me if you want to buy it or not."
Right.
And if you think realtors are not doing that, you're crazy.
Yeah.
Right? Because they do it all the time. And it's wrong. And I'm sorry, I'm getting on my high.
No,
horse
it
here,
is
right?
wrong.
No,
And
Absolutely.
it's wrong. And it's so bad for the sellers. And every time a realtor calls up and goes, I had one 2 days ago call me on a house. "Oh, I didn't realize that you're on Supra. I don't have her super key." Right? Then you ask them, because I get a little PO'd about that. Why don't you have a super key? "Oh, I just now to get around to doing it." I go, it's $8.99. It's $8.99 a month. You can't afford $100 a year to make sure that
Right.
houses are protected, that you're showing or that you're listing,
Yeah.
right? I go, you can't do that. And they all make the same excuse. If they can't afford $8.99 a month for the lockbox, and you're hiring that realtor to be your realtor,
To
and
sell
people
your
have
house.
no idea
Yeah.
about this little insider stuff.
Sure.
People have no idea that you're supposed to sign those agreements. realtors that were always.
That's how much they care about your property, by the way.
Yeah. I really care about your property. Make sure it's secure and making sure that no ne'er-do-wells come into your property.
Right.
Let me go to Home Depot and go pay $25 and turn in, put in this code. It's ridiculous. And then the other thing people don't get is if you ask a buyer's agent or agent to show you a house and they say they want to fill a form, most buyers do not want to fill that form. They do not want to fill that form out. They want to be tied in with the person and all that. My team has always signed buyer's agreements way before they were required because I wanted the people to understand what they were doing, but I also wanted them to understand you're hiring me full time.
Right.
If you find something on the street, you find it on Zillow, a neighbor's friend, a friend of friends said there's a perfect house for you, I'm still your agent. That's why you're hiring me.
Right.
Right. So when you don't want to sign the document, there's so many realtors that will go, okay, because they're afraid to have that talk. Now, with the guy that I talked to you about before who ended up buying the house with Mike and not me, they found the house with another realtor and everything. I don't care that I let that one go. I'm not risking $5,000 for anybody. And to him, it wasn't a big deal because he's not at risk to pay the $5,000, which told me how much he cared about me. And I did all these deals for him. I helped his family out many, many, many times. But when it came push to shove to have my back, he didn't. So I was like, I don't need to work with you. I got plenty of other people that care about me and I care about them. And I'd rather work with those kind of people than you telling me, oh, Jim, don't worry about it. Risk losing $5,000.
Right.
Right?
Hey,
it's not my $5,000. Yeah.
Good.
What do you care about?
Come
right. On. And this was the kind of guy that always cut corners anyway. Anytime there was a way to get an edge on somebody, he did.
Yeah.
So the thing was, so I kind of knew that's why I put my foot in the ground. I'm sorry. Yeah. I know we have a call.
Actually, well, we do have a call. We're going to get to AJ Holman.
Oh, okay, great.
You wanted to jump in on this conversation. Yeah. Magali also asked, how can you tell the difference between just an agent and a real estate?
Realtor?
Realtor, yeah. As a consumer.
Well, the first thing you do is you can ask them, are you a realtor or a licensed agent? That's the first thing. The other thing you do is you go to the brokerage and ask them, or you can go to the National Association of Realtors and look up their members and see if they're an active member with the group.
And that's if you hear about the lawsuits, NAR, National Association of Realtors. The nice thing is you can go there and find out who's on that list.
Yes, you
can.
So
we go there and put in Jim DePola and it'll be like, yep.
And you also can actually go in Florida. You could actually go to the Department of Business and Professional Regulation and see how many complaints, if any, a realtor's had. Thank God I've had none. In the 1,000 transactions I've done. But Rob, my old business partner, he did get a complaint and he won. He creamed him. But it was a guy who was doing a short sale. He wouldn't fill out any of his paperwork. Then he lost the house to foreclosure. So what does he do? He files a complaint against Rob for not doing his job, right? Rob did everything. We had everything documented, right? And so what happens is there's a preliminary review from DPPR just to see if it's even a legitimate complaint, and he got spit out.
Yeah, see you, buddy.
That one, it didn't even get past that, but it was still on his record, right?
Stinks.
But it showed that he was completely clear
on the record that there was nothing here.
Right.
Thanks for being nothing on my record.
Yeah.
Let's say hi to AJ. What do you say?
Yeah, that would be great.
AJ Holman, experienceappraiser.com. Hello, my friend. How are you on this Saturday?
Good morning. I'm doing pretty good, guys.
Hey, congrats. Mike had told me yesterday, Mike Ralph from the mortgage firm told me yesterday that you got that one deal done. No problem. And I know you texted me too. He was happy also.
Yeah, he got the government program on that one too, so that helped a lot with their move-in.
AJ was closing a deal with Mike Ralph for one of AJ's buyers, and they were using a government program. Everything was going through smooth, but then they had a delay for the closing date, so they had to push back the closing date a couple of days. And AJ
it was only like 2 or 3 days, but it just made it it made a difference this time.
Well, legally, that's what I wanted. That's the point I was trying to make, is legally under the contract, if they didn't close by that last day that was in the contract, the seller could have kept the buyer's deposit and told them, too bad, I'm not selling you the house. They could have done that, right? So AJ was
Yeah,
very
but
concerned
they
about
need
that. They
to-
didn't do that, but that's what could have happened.
Yeah, they needed to sell it. They needed to sell it as bad as we needed to buy it. It's just, sometimes that last second delay can, really hurt.
Well, thank God you had a
What I wanted to mention-
reasonable seller and was willing to wait a couple extra days. No big deal.
Yeah, it wasn't too bad.
Yeah.
So the reason I was calling is just, and I know you know this, Jim, but you guys just haven't mentioned it. With the new commission structure, the whole problem is that the buyer doesn't have the money. They're in the middle of their, you're scraping by. The average cost of a home is $500,000 in our county, and they don't have an extra $15,000, $10,000 to chip in at that moment. They're trying to work up a down payment, moving costs, everything else, and that's the biggest impact of this rule. Is the buyers don't have the cash.
That
and
kind
the
of
sellers do.
That kind of gets to what Johnny was saying. So Johnny was saying earlier, I kind of got off track. He was saying, well, if I wanted the house and I was being told that my buyer's agent wasn't being paid by the seller, so therefore I couldn't buy the house. He goes, I'm not going to let that stop me. I'm going to buy that house. But what you have to understand is you've signed an agreement saying you've already agreed to a commission that would be paid. And if the seller wasn't paying it, you've agreed in that contract to pay it. So if you decide not to do that, you'd be breaching the contract that you signed. And the buyer's agent could have legal recourse against you.
Yeah, and that's where
which is a horrible
that's
situation
where
to
as
be
a
put in.
consumer, you have to be well aware that that's probably not the best contract to sign. Your commission is negotiable, and the contract you sign should say negotiable based on property. I might pay you 3% on that one, and I might only pay you 1% on that one. It is all going to depend on the property, right? And that should be, if you're a savvy consumer, the way the contract is written up. Again, you don't know what you don't know, though. And I think that was the big part, is many people didn't realize these commissions are negotiable.
Mm-hmm.
Always have been.
Yes, but but
if you're making them negotiate it up front before you know the situation, which is effectively what you're doing.
Right.
And think about this. You qualified for the loan. Was that part of your loan qualification?
Right.
Because now you might not be qualified.
Right.
Right. Yep, I didn't even think about that.
If you're stretching your limits,
you might not have enough cash reserves to make up the difference.
Yep.
So I think, and the other thing that they're not taking consideration of, I think, in the big picture, is that yes, the sellers are paying a buyer's agent fee, and that system's worked for almost 100 years. That's been doing, I think, since 1913 or something. That's the way the system has been. Seller pays buyer's agent fee, right? Unless otherwise stated, that's kind of the expected.
It's been forever like
so when you buy a house, right, you're getting that benefit, right, of not having to pay anything and getting I'm talking about hypothetically, you're getting representation without having to pay for the representation because the seller's paying it for you. But when you go to sell, when that same person who bought the house, when they go to sell it later, they're going to end up making up that money that they saved because now they have to pay the other person's buyer's agent. So in the long run, after all these buys and sells, it kind of washes out.
Right.
I would think it kind of washes out.
I guess in a perfect world, as a buyer, when you sell that home, you probably will end up paying more than your original savings, because in a perfect world, you're selling it for far more than what you bought it, and the commission you're paying is considerably more. So in a perfect world, you're like, man, I hope I pay a lot more commission than what I just saved when I sell this house.
Yeah, because the house is worth more.
It was worth more, right?
Yeah. So
that's true. That's true.
Yeah, so you're right about having the buyers struggle with paying that. And but then what happens is what they're forcing the listing agent to either represent somebody without being paid and having all the legal liability for it, right? And then they could be sued by the buyer, even though they weren't hired by the buyer. The buyer just kind of came to the property that the listing agent wanted to sell.
Unreasonable expectation.
Or what could happen is the listing agent tells the buyer, I'm not representing you at all. I'm not going to be your agent. You're on your own. and I'll walk you through the contract, meaning like help you with the contract being signed and everything. But as far as meeting all the deadlines and everything and all your responsibilities about inspection and appraisal if it's needed and all that, you got to deal with that on your own because I'm not going to be your agent for that, right?
So
And
you can hire him as like a transaction coordinator, yes?
yeah, and that might end up happening where I didn't even think about that, but some listing agents might say, look, I don't want to represent you, Johnny. You're going to be your own guy if that's the way you're going to be, right? Because my seller isn't paying your buyer's broker's fee and you don't want to pay it yourself. So you're on your own, Johnny, but I'm going to charge you $500 and I'm going to walk you through all the contract and I'll give you the deadlines when your appraisal is supposed to happen, when your inspection is supposed to happen. Make sure you do your survey and make sure you hit all those timelines so you don't breach the contract.
Right.
And then charge you a flat fee for it, right? But you're not really getting full representation.
You're not represented,
and
no.
then who's negotiating for you?
Yeah, you are.
Right? You're negotiating by yourself.
Yep.
So I don't really feel like the way they fixed it, it's like that famous thing that Rob used to say. What's that famous saying? We're the government and we're here to help you. That Reagan saying, right? That we're the government and we're here to help you thing. I feel like that's what happened with this. And I almost feel like it didn't really have an impact that they thought it was going to have. But if we were in a COVID market where we had 0.9 months of inventory and everybody was getting 10, 15 offers, that would have rocked the real estate agency market like crazy because most of those buyers agents weren't going to be paid at all.
Go ahead, AJ.
It would have priced a lot of buyers. Like it was already hard to get your offer accepted.
Mm-hmm.
You would be priced out on your upfront cash because you wouldn't have enough money again to pay your realtor. And if the seller just doesn't want to do it, then you just don't get a house. You know what I mean? It's not that you're going to get it for less. They're just going to go to the other guy.
Yep.
I don't know how to put that. The buyers, I just don't feel like the buyers are being served. Like you said, I just don't think it's meeting the intentions. It reminds me of when they redid all the appraisals with the HVCC, and it was supposed to make everything more independent, and it was horrible for the industry. It was horrible.
Did they keep it? Did they keep those regulations?
A lot of them they did, but the main thing was about putting a layer between the appraiser and the loan officer,
right?
By putting a management company in between. But they became profit centers.
So the management company, they were selecting which appraiser came out. Like before, it used to be, from what I understand, like the mortgage broker had like a top appraiser that they loved working with because the appraiser always gave them the number they needed, right?
Yeah, favorable.
So they would call up AJ. And I'm talking about a long time ago. We're talking about.
No, but I've been in the industry a long time, though. But that's the cynical view, yes. And I'm sure that there was some of that going on. But it's just like right now. You use the vendors you use because they're the best. They're the ones that you believe are going to do the best job for your client.
Right.
One of the best loan officers that I've worked with for years, the very first file for him, I flagged the roof and stopped the loan. And he said, you know what? You're an honest appraiser. I'm using you from now on. Mm-hmm. So it didn't always work that way, that it's the cynical way.
Right.
You know?
Right.
I never met. If people try to push us around on numbers, we usually as appraisers, we just don't deal with them anymore. And I don't want somebody trying to muscle me into doing a certain number. I don't care how much business they give me.
But AJ's built like us, Johnny. Right. And I'm telling you, as an investor, like in 03 to 09, there were tons. I knew as an investor working with loan officers that had their, I'm going to give this particular deal to this person because he'll get me the number I need. And they used to openly talk about it.
There was.
Right. No, so that happened a lot.
You had that in any.
Yeah. But now that didn't mean everybody acted like that. Right. That didn't mean that you acted like that. Like I'll make people sign buyer's agreements. Right. And if they don't want to, I'm saying, I'm sorry, even though I've been working with you 3 or 4 deals, I can't do it anymore because that's the new regulation. I'm going to comply with it. But AJ, since we got you on today, because I didn't know until late yesterday that everybody was going to go, I was going to ask you if you wanted to come on today anyway. You mentioned some stuff that you were seeing statistically to me about 10 days ago. Do you want to just bring that up real quick? A couple of things that you noted about the changes in the statistics in the market?
I did actually run some stuff on sandalwood before I called, just in case you did ask me. Just as an example neighborhood, because I love using that one.
Mm-hmm.
And I'd say it's very similar to what I see all across the board. The inventory's way up. It's triple what it was a year ago.
Mm-hmm.
But the sales volume is increased, especially the last few months. And by the way, that increase in inventory, it's so consistent. You can just see it on the graphs. It's just up, 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 up.
Mm-hmm.
But I was looking at the sales prices in there, and statistically, they had a little bit of a drop recently. But then I looked at that, and a lot of those recent sales were kind of beat up more than the dated ones. And when I looked at what was on market, what was available today, it was stuff that was in the price range from 60 to 90 days ago. So it's steady. It's just still people aren't really dropping their prices. You can find deals, but on average, there's a lot of inventory, but people don't need to sell like it was back when things crashed.
Mm-hmm.
That's the difference. They're just not as motivated like they were. Some of them are, but not that many, not enough to cause the values to erode. Of course, it depends on the submarket. The 55 and older condos, those who's been getting these really high HOA fees. Like my cousin, I helped him buy a place. He's on a fixed income. He's on Social Security, $1,600 a month or whatever it is.
Mm-hmm.
The HOA fees at some of these places are $800 or $900 a month for these little 55 and older cheap condos.
Yeah.
Nobody wants to do that.
Yep, that part is really crazy. The other thing I'm hoping you're going to keep an eye on this is we're getting scuttlebutt now that the inventory is starting to shrink a little bit now. So we were seeing this ballooning of the inventory, but I think last month's inventory was slightly down. Like the last monthly report was slightly down compared to a year ago and compared to the month before. And supposedly that's because all these people that have been on the market forever didn't get the price they wanted and they're leaving the market. It isn't that more sales are happening. It's that people are pulling off stale listings.
Down year over year, huh?
Yeah. So I want to see if that's a trend or not. We're not at a trend point, but it is a blip that I'm keeping an eye on right now.
Well, I mean, for consistent trends, the most consistent thing I see right now is that sales volume has been elevated for the last 3 months compared to the rest of the year prior.
And when you say sales volume, you mean the amount of sales, right? The amount of sales, not the price.
Number of sales.
Yeah,
Correct.
the number of sales.
Right. I'm talking about inventory.
Mm-hmm.
And like I said, inventory is, I don't see it going down in my stats that I've been running. But that doesn't mean, again, that certain submarkets, and I don't consider new construction because that's not in my statistics of what I look at.
Mm-hmm.
And that drives a lot of the market too, that I don't have visibility to that.
Yeah, I'm going to be going up to Central Florida in about a week and a half to help one of my customers, Brian, buy a new construction home up in the Ocala area.
Nice.
And I'm hoping we're going to get really good results because here's a headline from CNBC. Home builders are slashing prices at the highest rate in 3 years, right? This is happening all over the country. Yep. The builders are really jonesing right now, and people don't realize it. A lot of people are like, half the people I talk to are surprised when you mention this. The other people are like, I know.
They're holding the bag.
Yeah. I wanted to get Lisa and Kevin. Maybe they're listening today, maybe not, but I want to get them on because a few months ago I helped them sell their house and they moved to Palm Bay. I think it was Palm Bay. But they ended up getting $40,000 below the list price, right? And got money for closing costs and down payment and got a reduced interest rate, just like Michael and Colleen did in Orlando recently with a new construction home. And you can get the triple whammy now and get the three things: lower price, closing costs, and lower interest rate.
Boom.
From these new construction developers.
And
if you go out there,
yeah.
That's nationwide, huh? I mean, Florida I can see because we really kind of developed
it's
so much so fast. The inventory really took off.
Yep, it's definitely nationwide. And Florida and Texas are worse than some of the other parts of the country, without a doubt. But it's happening all over. Now there are pockets that are stronger. I think the breadbasket, Kentucky, Nebraska, that kind of thing. Those breadbasket states, I hear they're doing okay, and a lot more people are moving to those areas for affordability now.
Interesting,
right? I think that's kind of interesting because you don't hear of those states normally as a place you're moving to,
right?
But it's specifically bad in Florida.
And when you do, they're like, "I'm moving to Nebraska."
Yeah.
Job move or something like that.
Yeah.
I remember one of my friends.
No offense. I mean,
left a journalism job in the Palm Beach Post and moved to Alabama. No, Mississippi. He moved to Mississippi to work at a Mississippi paper. His wife literally broke down and cried for like 3 weeks that she was moving to Mississippi.
We're moving.
And they ended up getting a divorce because she did not like Mississippi, and he stayed.
Mississippi's got some great spots and some not so great spots. I mean, let's be fair. Hey, AJ, it's always a pleasure to have you on, man. I hope you have a great rest of your weekend.
Thanks, guys. I hope you have a great day.
Yeah, thank you, AJ.
Once you let everybody know where they can reach out to you if they need an amazing appraiser.
Experiencedappraisers.com.
That's what I'm talking
Experienced about. With the D at the end, appraisers.com.
I love it.
And AJ, the person we're going to go see in that house in West Palm, he sent me a message yesterday saying, "Hey, you're coming over at 10, right?" I'm like, "No, that's the 18th." So anyway, he's ready, just so you know.
Banker,
okay.
That's the same loan officer that was the guy that I told had a bad roof. An honest guy.
Yep. Very cool.
Funny?
Yeah, that is cool.
AJ,
have a great weekend, AJ.
Appreciate you, buddy. There's AJ Holman, experiencedappraisers.com. And again, one of the amazing resources, part of the team, FloridaTalkRealEstate.com. When you need a pro's pro, remember FloridaTalkRealEstate.com, and we can give you amazing referrals as well. AJ is definitely qualified as such. We have very limited time.
Yeah. I just wanted to mention one other thing about new construction. 38% of the builders nationwide said they cut prices in July. 38% surveyed. So it's really happening. It's a very big dynamic right now. I'm telling you guys, it's a great time to buy now. I keep telling everybody, it really is a good time to buy.
It's just weird because you every now and then you read an article where they say that there still isn't enough housing in America and we have to build more.
There's plenty of it. What they need is affordable housing.
Yeah. Well, there's that too.
Yeah.
So true.
Yeah. We don't have any affordable housing.
Mm-hmm.
We have plenty of housing. Yeah. It's just not very affordable. Yeah. Although it looks like it's slipping more into that realm. We just gave an example of the triple whammy for somebody.
And you have motivated builders,
right?
And you also have motivated sellers. So not everybody's motivated. So that doesn't mean you're going to get a deal on any house that's on the market. But if you sieve through, pick and choose through all the properties, and you start going through them, you're going to find those deals out there for sure.
Yep, they are to be had. And you also need to be positioned. Like, don't just make up your own mind that you can and can't afford. Understand what your numbers are. Let that dictate what exactly your next move is. Don't just let the interest rate be the determining factor. Yes, it is a factor, but the reality is you have to incorporate so much more, from your taxes to your insurance, down payment, your closing costs. Like, all these things matter, and there's a way to attack all of it. What you need is guidance from professionals, pros. And the good news is, if you're listening right now, you're well aware you have access to just that. It's FloridaTalkRealEstate.com, the one-stop real estate shop. We've called it that for a long time now, 13 plus years now, for a reason. Well, it's because you get a team of pros. These are experts in their field, and it is amazing. If you've ever bought a home, sold a home, stuck with a home, you didn't know what to do, and you've worked with the team, you've seen how they work cohesively together. They pick up the phone, they get answers, they're boom on it with each other, and it's a different place than kind of stumbling through with somebody you hope knows what they're doing versus going through it with people that absolutely have your best interests at heart and know exactly what's going on. They've been through the markets. They've been through the changes. They ride it out every day. They're in the trenches. Experience for yourself. FloridaTalkRealEstate.com. On Facebook and YouTube, it's Florida Talk Real Estate. Know it, use it, love it, share it. Jimothy, have a great weekend, my dude.
You as well, Johnny. Thank you very much. Jim, have a great weekend as well. And thank you for listening.
Thanks, guys. Happy South Florida.
Good luck in whatever you get into. I hope you have a little R&R. And again, lots of luck if there's any cards coming your way this weekend. If you get first luck to be able to sit down and play some, and then luck to be able to take some of that cash away.
Royal flush would be nice.
Oh, okay.
Oh, yeah.
We're not asking for at all. Always a pleasure.
I'd shoot for a full house, but
if you're gonna aim high.